Good morning, traders. It's October 1st and we're stepping into another high stakes open. Yields are in a delicate balance. Tech's testing its resolve. Defensives are flexing quietly and gold is signaling that many are still hedging. We're still going deep into overnight cues, macro undercurrents, rotation flows, and I've got a razor sharp trade ideas. 2 of them today, ready to execute at the bell. So traders, let's lock in. Let's talk about our overnight and futures setup. So futures slightly firmer in S&P and Nasdaq. Dow currently flattish. Asia and Europe. Asia rallied on tech, internet strength. Europe more cautious. Defensive names led the open. The dollar pushing back, good for multinationals and commodity leveraged names. Gold firm near highs, sustained demand for hedges, and oil is choppy. Range bound with soft bias, pressure remains on energy sector. This is a talented open, not a runway, but a setup for directional follow through depending on how macros react early. So this is where we'll find the backbone of our video today. Rates are the emotional center. The market is in a tug of war between bond pulls expecting further easing and risk managers wary of inflation surprises. The 10-year yield will act as the emotional gauge. If it dips below yesterday's low without volatility, growth names tend to catch a bid. If it pops above resistance, rotation kicks in. Then inflation currents and stickiness. Even though headline inflation may have cooled, core inflation, service inflation, and input inflation are still lurking. The market is watching for leaks, rent, wages, tariffs. A fresh upside surprise in any of these could jerk the tape hard. Then, talking about structural sentiment, premium. Many fund managers are lean, overweight equities, leverage is creeping, and cash positions are low. That means there's a higher probability of momentum getting traction, but downside risks carry bigger consequences. Then, the macro ripple effects. Dollar weakness gives breathing room to international names and commodity producers. Gold strength tells us many are still hedged on risk. Commodity dynamics, oil, copper, base metals are indicating global growth expectations. Weakness there pressures cyclicals and energy. Strength hints at a global demand creep. All of this converges at the open. The bond yield reaction and inflation whispers plus the dollar shift will amplify one trade bias or another. Now, continuing to talk about rotation under the hood. Let's dig into where flows are moving and where could rotate. So, firstly, tech, AI, cloud, semis. Still the Nasdaq's backbone. After recent weakness, much of the strength in semis and cloud names is coming from capital reconvening at the first signs of yield relief. Leaders like Nvidia, Oracle, Broadcom, AMD will act as pulse checks. If they break higher cleanly, we could see broader leg up. Alright, then defensives and healthcare, quiet strength building. In a market wary of inflation or rate missteps, healthcare tends to act as the base. Names like JNJ, UNH, Major Pharma, and MedTech tends to outperform during tech pullbacks. That's the catch water when the tide recedes. Play, traders. Alright, then consumer and discretionary is a bit of a mixed bag. So data from retail, same store sales, e-commerce, margin commentary will drive premium. Consumer and discretionary is a mixed bag. Data from retail, same store sales, e-commerce, margin commentary will drive direction. Premium, strong brand names with pricing power tend to outperform in this regime. Weak margin, commodity exposed names struggle. Then onto financials, a rate bounce helps them. But if long yields stay flat or drive lower, their upside is capped. So watch regional banks and mortgage plays. Early signs here could map out interest rate trajectory sentiments. Alright, onto energy and materials. Still volatile. Crude softness is a headwind, but any tightness surprise could shock energy names right higher. Material names tied to global manufacturing will be sensitive to cyclical demand signals. Then lastly, small caps and breadth. The real tell will be whether new money rotates into smaller names or stays concentrated in mega caps. If small caps don't follow through, the rally lacks base broadness. Rotations will likely be contextual. Any rotation away from tech into defensives or materials will indicate underlying fear. Watch how sectors stack up against one another in the first 30 minutes. Alright, I've got 2 trade setups for us today. The first is, let's jump into here. So we're taking a look at the dollar first, but I want us to take a look at Nvidia, ticker symbol NVDA. So this is our continuation or pulse check. The question is why? Well, being a leader in AI and semis, yields easing and sentiment shift will benefit it. So this is why we're taking a look at Nvidia today. If it will just load up on the screen so I can give you a look at the graph. I've got a long trigger and a fade alternative for Nvidia. Bam, finally. So our long trigger will be a break and hold of pre-market high with volume and confirmation from SMH and cloud peers. A fade or alternative will be an early spike that fails VWAP and tech falters, fade into the midpoints in that case. And our risk line will be a hard stop under opening range low or failed VWAP retest. Okay, our second stock to take a look at today is Johnson & Johnson, ticker symbol JNJ. So JNJ offers a relative safety, solid balance sheet, less sensitive to cycles. The long trigger will be if ORH break that holds while healthcare ETF confirms strength. Alternative entry will be if the open dips, first reclaim of VWAP above support as long entry, and invalidation will be if we lose VWAP and sector rolls, then we exit. Now let's talk a little bit about our tape tails and execution filters. So we're going to jump back into here. So futures versus VWAP is our first pullback test critical. Breadth by 10 a.m. wide participation versus narrow leadership. Liquidity magnets, ORH, ORL, prior day, HOD and LOD and pre-market extremes. And let volume validate price. Don't chase. So we're going to remain patient and we're going to remain intentional. Now let's talk a little bit about our closing push today. Traders on October 1st, rather the last quarter, Q4 of 2025. Here's what tonight's open stands on: macro tension, rates and inflation, techs fight for leadership, defensives anchoring safety, Nvidia is your momentum bellwether, JNJ gives you ballast. Watch yields, let the tape prove strength, and trade confirmation, not hope. Let's see who's running into this open. I'll see you at the bell. Thank you for joining the video again today. I hope you found it helpful. Happy trading, and I'll see you again before the bell tomorrow on October 2nd. All the best. Take care. Goodbye.